stacks on her mind, grinding all day, hustle refined, shatter is ceiling, she's fierce and untamed. Boss is her title, wealth is her game.
Long ago, no one could have beat him, as we all know, until he clashed with Delilah on top of the bed.
I just want to welcome you to the Hiring Woman podcast, a podcast that's dedicated to really making life and legacy conversations accessible so that hiring women can make confident decisions and live the life that they truly deserve. And if you've been riding with us for a while, you know I love connecting music with the topic we're going to discuss today. And today I got a little bit of help for this one. What we have been listening to was the sounds of Harry Belafonte, and that brought me back to my childhood. I haven't heard Harry Belafonte in a while, and I was saying to our guest today that, if you are a Caribbean person, especially of Jamaican heritage, Harry Belafonte is everything. He's handsome, and he's got these beautiful, catchy songs, and we all grew up on them. So I'd love to know, listeners, what did you think of the song? Any of you heard this before? Because I had never heard it before. And Emily, I just love that you heard about this song and recognized that it would be perfect for you introducing the topic to your the communities you were speaking to. So I just wanted you to know, hiring community, this was a special request from our guest today. I don't normally feature male singers on the podcast, but this song was so perfect for this episode, as you can see.
Right.
So thank you again, Emily Burt, for introducing me to this new gem. The song is entitled, in case you didn't catch it, Men Smart, Women Smarter. And guess what? Ladies, you need to hear this. Research on investor behavior actually backs up that men are not as smart as they think, okay?
Right.
Actually, men think they're smart about investing, but, listen carefully. Women are actually smarter. So I'm really grateful to be speaking with Emily Burt, Executive Vice President of Cardinal Capital Management and Chair of her board, who's going to be talking to us about investor psychology and what really affects investment decisions when it comes to things like when people panic during market downturns. Have you seen any market downturns in your portfolio recently? I have countless. I could, go back to. I mean, just some of the downturns happening in the market right now because of sort of political upheaval. But important to know, why do people panic? Because again, these are movies we've seen before, but do people unfortunately make these decisions to trade when the market's down, maybe get out of the market? And some investors actually trade constantly, and others, when markets are very, very volatile, might avoid investing altogether. So what type of investor are you? And we're going to talk about as well, importantly, why do we still see with women gender gaps in the way? Feel free to, let's talk a little bit about what investor psychology means in practical terms.
Yeah, sure. That sounds great. Well, thanks so much for having me join you for this conversation today, Jackie. This is, well, it's not officially my day job. I'm not a psychologist. It has really been a focus for me and sort of a love of mine, working with women and working with men and women, working with investors for the last 2 decades. I've been working with clients as they're trying to make investment decisions and seeing firsthand what is driving them. And it's not always acting rational. Quite often investment decisions are being driven, sometimes for better or worse, by these deep-seated emotions and our own psychology and thinking. Our experiences shape the decisions that we make, and especially decisions about money. So this has been a topic that I've spent a lot of time on in the last few years, digging into and wanting to understand and wanting to sort of back up the experience that I'm having working with clients with research, just to see, am I alone in thinking that men and women work differently and their brains seem to work differently? But the research that I've been able to find absolutely supports what I've been experiencing with clients over the years. And it has been fascinating for me. So all it makes me want to do is to research this topic even more.
Yeah, and I'm actually truly appreciative of the work that you're doing, Emily, because a lot of the insights that you had actually shared at a recent conference that we were at really resonates with clients in terms of how they behave and make those investment decisions that you're talking about. So there is a huge disparity with, what might make sense and what might feel good.
Yeah.
Unfortunately for people. But let's talk about, why do you think emotions matter so much?
Yeah, so when it comes to our psychology, when it comes to investing psychology, I think sometimes it can actually help us. We can make really good, sound decisions by following our instincts, but sometimes our psychology can, in fact, get in the way of us doing what we should. So what I think is so interesting here is that our behavior is driven by, the way we grew up, the way that we heard about investing, the way that maybe we saw and heard our parents talk about investing, the way that we were raised to think about risk and whether risk is good or bad. That all drives us. For boys and girls growing up, the way that we've been raised quite often is different. And the outcome of that might be for better or worse. Not all of us are raised in the same cultures either. And I think many of those cultural factors will influence our psychology and our thinking about investing. And all of this, I think, can be very deep-seated, can be very difficult to maybe overcome when it's something that is preventing you from doing something you should. Finding great advice is so important.
Yes, and we're gonna definitely talk about how they can do that, how investors, especially because, what I see in my practice are women who are smarter, but come into these conversations about investing and feel like they're quite dumb or they're lacking in some way. And so I definitely want to dig into all of these things with you. But before we do that, you were talking about how just your background and how you were raised could impact decisions you make with investing. I'd love for you to dig into as well how rational investor assumptions sometimes might look a bit different than, say, real behavior. And I know in the study that you talked about, there's this whole issue with people feeling overconfident sometimes. Maybe they're feeling stung by losing money or maybe something they heard or saw, which are all the things I see in my practice too. But I'd love for you to talk more about that.
For sure. So yeah, maybe we'll start with that idea of overconfidence. And I'll say that there aren't many women that suffer from overconfidence, and that's probably both in life and in investing. And when it comes to investing, this is actually not a really bad thing, because some of the issues that we see more with men that are investing is overconfidence impacting them negatively. And I'll share a bit of an example.
Please do.
So when it comes to, say, a do-it-yourself investor, and they're maybe they're a day trader, or they're trading their investment portfolio, and every time they make a trading decision, that's one more time where you could make a bad decision. So the more you trade, the more chances you are of making poor decisions. But when an investor, say, let's call him Mike, is super confident that every decision he makes is going to be amazing, and he makes trading decisions, say, on a daily basis, he is actually eroding his performance compared to maybe Janet, who sets her portfolio and forgets it and doesn't trade, for 2 years. Like you can just erode performance by both trading fees itself and by making bad decision after bad decision. Every bad decision needs to, be paired with a half decent one. And in the end, he's probably no better off when you look at the returns 2 years later. So there's actually research that shows that women are outperforming men simply because they're not trading as often. That is wild to me.
No, it's, as you said that, I was just thinking it's so fascinating, right? Because I think about all of the coffee or over coffee, usually more over cocktails or dinner party conversations or water cooler conversations with men that I've heard brag about their stock picks. I don't know if you've been in those rooms or beside those individuals who've made, bragged about that trade, when, as you're talking about it, like these day traders or self-directed traders are doing multiple trades because they're trading so often. And, good trades can compound, but so can bad, especially as you mentioned, the more times you do it. So there's a leave alone camp, which often are the women, is what I'm hearing. Yeah. And they're doing better because they're like, set it and forget it. And then there are the men smart, women smarter. The men who are kind of like, I'm so smart, I have this all figured out. Let me keep trading and potentially, buying high, but the market could do something totally different. And, they buy high, sell low, they don't even realize they're doing it. They pay more taxes and more potentially costs to do all this trading. And so here they are talking about that one trade that they made money on, but not looking at the mistakes or even looking at the amount of time they've spent trading that's cost them money that may negate that good trade they did that one day is kind of what I'm hearing. Crazy.
And there's another example I'll share. I've had many investors come to me looking for advice, and many men will have these outsized stock positions, in this one great investment idea, and they've put like a lot of money on this like one chip, right? And they're very confident that it's going to go well. Otherwise, they wouldn't have put so much in that one stock. But it could.
So say that again. They put a lot of money. Just because this is where I lost you. You said they put a lot. Sorry, could you repeat that? You were saying they put a lot of money on this one chip, and then I lost you. So feel free to keep going.
So I've seen men have a tendency to put a lot of money into one stock idea, probably more than they should. Say it's like 20 or 30% of their overall investment portfolio on this one name. So those of us in the investment community would say that that is not a proper amount of diversification, because if that doesn't go well, there goes 20% of your total portfolio. That's too much. It's considered too much risk all on one name. But I see this happening more often with men than with women. And I think that it's this overconfidence that's behind making that decision, where, they're so sure this can't go wrong. And even if it does start to go badly, they're so confident in themselves that they won't reverse course and admit that, oh, maybe this was a bad idea, I should get out before I lose everything. They stay put,
Right.
and they're sure it's going to come back up, and it may never go back up. But that overconfidence to overweight in a single stock is quite a risky behavioral move, and I don't see that happening with women in the same way.
Yeah, and you talk about these anecdotal scenarios, and I have certainly the ones I've seen. We go back to Nortel. I remember those clients I was trying to talk out of getting out of Nortel, BlackBerry. The list goes on. Ladies, fill in the blank of potentially what you've heard at dinner parties yourself. But I wanted to say, even though we have these great anecdotes, the studies that you've cited, like the whole boys will be boys study, I thought was fascinating, that talked about some of these like 1,000 brokerage accounts. Exactly what you said, which is that men are trading more frequently than women. And so I kind of want to talk again about some of the other behavioral biases you see in everyday investing, just kind of some of the other ones we haven't talked so much about when it comes to just investors, particularly women, around loss aversion, maybe how people might feel when they've heard a stock tip or seen some good experiences with a particular investment, and they just think everything's going to keep going up. Or something happens and they're like, see, I told you, I knew it. Anyway, and one of my favorites, which is FOMO. FOMO is like so fun to me, but feel free to make us even smarter on some of these.
Yeah, loss aversion is a great one that we can cover next. And I would say that a lot of what is driving women in particular is that fear of loss. So what loss aversion means is that your decisions are driven much more by fear than, say, what tends to drive men is that excitement of gains. So you've got men over here that are like, I'm okay with risk, and I'm super confident, and the idea of outsmarting my buddy next door by investing in this stock pick, and then I can brag about it. Like,
that's right.
There's research showing that kind of behavior tends to drive men more, whereas women on the other side, they're not interested in outsmarting their neighbor, or they're not interested in having this really big risk payoff. That's not what is driving them. Instead, it's, well, I don't want to lose everything. I'm more afraid of what could go wrong by me making choices. And that tends to mean that women are taking on less risk. You could, depending on the study, some try to dig in and understand where that's coming from, whether it's that men are raised to think that risk is a masculine trait, and women therefore are not raised from a young age to think that risky things like investing and stocks and that sort of thing isn't really for them.
Sure, even owning their own business. A whole different, it's just not the stuff we do. We just we want to men hold on to what we have. Like,
for sure.
It is a survival thing, I think.
I also think a little bit could simply be that we're not raised maybe with the same level of financial conversations that boys are. So without that financial literacy and that sort of social norms of taking on risk and not being afraid of risky things, not seeing those as masculine traits, I think that's also probably part of what shapes girls growing up, so that later on in life, we're still driven by that psychology, whether we think we are or not, and that is going to impact how we behave.
It's so interesting because as you say that, I was thinking about a conversation I had with my mom when I was younger, who, she came here as an immigrant. And one of the things she said to me that we argued about was I should be more content with what I have. Maybe a little bit more, but not much more, but be content. And I was like, no, I don't want to be content with what I have. And I wonder how many women hear those kinds of messages, like coming to them, just be happy with, if you get a little bit better, great, right? But we shouldn't be like looking to take these huge risks so we can grow and really do well and exceed our expectations, because how unladylike.
Yeah, I think there's some generational differences too with how women have invested and
100%.
how we invest and how our kids and our granddaughters are going to invest.
Absolutely.
I hope that some of these biases will maybe reverse, but I really do think that the research is showing that how we behave with money and investing really does start with what we see from a very, very young age.
Say that again, sorry.
How we think about investing really starts from a very young age, the household that we grow up in, and how we see our parents making money and investing decisions, and also whether or not we are taught the same way maybe the boys in our household are taught.
It's fascinating because as you say that, I just think generationally, you mentioned, I was speaking from a perspective, and for confidant high earning community, if you come from this type of background, you probably would relate to what I said earlier, which is immigrant mom, single mom survival. That's kind of her background. And I'm a Gen Xer. But do you see, and we haven't dug into this before, do you see some generational changes around that? I'd love to know if you have some that you might have noticed so far in what you've researched.
Yeah, for sure, I do. I think that, well, for one thing, women are investing much younger than they once did. And, it wasn't that long ago that women couldn't even have a credit card. Opening up a bank account, they needed their husband to sign. Women were not investing or making monetary decisions like 2 generations ago. So, these things are still new in the grand scheme of the planet.
Right.
And there's lots of biases out there. There's even studies showing that women receive worse financial advice because investment advisors are assuming that women aren't knowledgeable. They're assuming that they won't notice if they get put into higher fee products. So women are being placed into worse investment products than men. Like there's a lot of stuff still.
Yeah, hold the phone on that one, because that's just kind of the kind of thing that I'm sure just really for women listening might just infuriate them. It infuriates me as an advisor in the industry that, what you're saying is people assume, advisors assume, and I'd love to dig into maybe some of the gender differences, like female advisors versus male advisors giving women less than stellar advice on investing because they figure they're not sophisticated enough. And how that changes if they're dealing with a female advisor. Obviously, there are great advisors out there that are both men and women, but I'm just fascinated by the research around this because it's something that women should be very aware of when they're going to look for investment advice. Because again, there may be that sense, and I've certainly talked to clients who might have dealt with a male advisor to begin with because they thought they might be smarter. And they realized they just want to deal with someone they can have a real conversation with, but that's a whole other matter. So I'd love for you to talk a little bit more, because ladies, are you hearing this? That women are, we get bad advice everywhere. And you're saying we could potentially get bad advice from people we rely on around something so precious like our money.
I know. Yeah.
So let's talk a little bit about that. Why are women getting, bad advice from the investing community?
Yeah. So let me dig into one piece of research. There's a research report that was done in 2023, so this is not that old. This research was done in Germany in partnership with a big German bank. So these university academic researchers they gathered data for 27,000 real client advisor interactions. So on average, after they looked at all the data, advisors were giving more self-serving advice to women than men. And they were more likely to steer men into less expensive funds. So they used gender as a proxy for financial sophistication. So to me, I would reword that to say that.
Say that part again. My apologies. For some reason, say that again, Emily.
Advisors were using gender as a proxy for financial sophistication. So in my own words, I would say that means advisors figured that they could put the women into mutual funds or products that had really high fees, and that the women weren't smart enough to notice. Like,
right.
That's right. Not good. Wow. This is not good stuff. And yes, this is data out of Germany, but I don't think that this is uncommon across the globe. This is probably
just extrapolate.
Find everywhere. That's
anecdotally what I've seen when I've spoken to clients about fees, and we're going through portfolios and sort of giving them a second opinion on their investments, is exactly what you've talked about. They don't even necessarily know what they're paying in fees.
So, I mean, a couple of things come from that type of data, right? Like, to me, I hope that investment institutions realize they have to do a better job of training their people, of, maybe checking to see that they're not putting more women in higher fee products than men. Like I think financial institutions have some work to do here. And I hope that is being done. That concerns me. And the next thing that I would say, and I do some lecturing on these topics. I want to be a part of training the next generation of financial professionals to be a part of the solution here. I want younger, finance students. I want the next generation of advisors to know this kind of stuff, and to be the first person to say this isn't right, and we're going to fix this, because I feel a very large amount of responsibility to be a part of that solution.
No, I couldn't agree. I couldn't agree with you more. And ultimately, what I'm understanding from what you're saying is women underestimate themselves about how much they know. Then the advisor community might also underestimate them. And this just compounds the lack of confidence and their ability to build wealth, right? And it's maddening. And it definitely means that there's work to be done. What can women do to actually protect themselves so that they protect their long-term investment and have more to rely on? We already know we are starting with the deck stacked against us with earning less than men and living longer, just to name a few.
I know. And that puts women in a tough situation, right? Like, we're going to live longer, and we have a higher risk of outliving our money. So we can't afford to just, park our investments in a GIC and just, hope and pray that we'll have enough money in our retirement years. Like, no, it's even more important for women to get their money growing for them, working for them, to invest in a really strategic way that's right for them, and to get sound advice. I also think that even our parents, and an older generation that maybe was maybe more afraid of investing and less confident with investing.
Exactly.
It's like those
Right.
baby steps of trying to educate yourself and getting to a point where you have a bit more confidence to do what you need to do, not just status quo. I'm just going to have my money under my mattress or keep my money in the bank.
Right.
But earning nothing for me, like status quo, even though it feels safe and fine, it's not going to be if you outlive your money. Like, that is a real risk too. So, trying to educate ourselves and seeking out sound advice that you trust is so important.
Absolutely. And are there questions that they should ask advisors? Are there strategies you suggest so that what I always talk about is just making sure you're in a relationship with an advisor where you can ask them the real questions, right?
Yeah.
So if you already don't feel like you're in a safe space, that's red flag number one. But what are some other strategies you'd recommend as women recognize, and whoever is listening recognize, they're probably dealing with some of this in their own homes now with, food inflation. Right now we're seeing the transportation or gas inflation, right? Cost of just getting around. So just imagine if your money stays the same and all of these costs just keep going up. Like, these things won't go down lower often. They're compounding. So women definitely need to see their money grow. So what are some strategies you can recommend that they can, take that baby step of, getting support?
For sure. A couple of easy things, honestly. First of all, for women that are investing with a partner, if you're investing with your spouse, attend those meetings, be a part of those conversations, and try to come away from every meeting having learned something. Because the time may come where your partner could be gone before you, and I do not envy anyone who has their partner taking care of the financial decision making 100%, and then losing their partner and one day trying to start from scratch figuring it out. Like, if we could not put ourselves in that position, it would for sure be for the best. Second, I would say, you want a trusted advisor, but the trouble with trust is that you could be taken advantage of. So the way I usually recommend someone double check what advice they're being given, is by getting a second opinion. Not all the time, but maybe, every 5 years, ask someone for a second opinion to review what you have and review what portfolio you're put into, review the fees that you're paying, review all those things by someone else, just to sort of check that what's happening is sound. Maybe that's a close friend of yours, it's a family member, or it's another financial professional. We all do that all the time. I'll review someone's portfolio regularly, and just sort of give my thoughts, give some recommendations on how maybe it could be improved, and it sort of forces their current financial advisor to be,
step it up a bit. Step it up a bit, right?
Yeah, right. Without that sort of outside review, you may not really know what's going on that you don't see on the surface, or there could be some you don't understand yourself, that's happening.
Yeah, because you mentioned two really important things. If the person that you're with, and now I'm just going to go back to your spouse, if they're handling your investment decisions and you're not in those meetings, you don't know what's going on. You also don't even know if they're a good steward of your money, right?
Mm-hmm.
Which is also some of the things I see when people pass away or divorce. Or one we didn't talk about that happens as well is people get sick. So what if the person you're with, God forbid, gets sick and you don't know what's going on with the finances, and you're sort of dealing with that, taking care of them while trying to understand what's going on with your family money at a time when you might need to access some of it, care or help, right? So just truly an important thing is to stay in touch with the money, even if you're not the first point of contact. And the second thing that you said that I thought was so crucial was around getting a second opinion. Like, consider confidant high earning community that if you've not had a fee conversation with your advisor, you don't know how if you're actually now on your with your investments and you don't know anything about how much fees you're paying, how diversified your portfolio is. I mean, we spent a lot of time talking about overconfidence and loss aversion, but there are a lot of other biases, right, Emily, that people can have when it comes to investing, that they need to be familiar with so that it doesn't hurt them, right?
Yeah. Yeah.
So there's some things to think about, like what how is your portfolio protected in downturns? How diversified are you? Does it match with what you want your portfolio to do? How will your portfolio behave in good and bad markets, right? So really important things to understand about your investments as you build, so that you don't make those decisions on the fly at a very inopportune time, right?
Yeah,
So,
absolutely. One other thing I'll maybe just comment on that I've seen working with a couple is sometimes it is the man that's more comfortable in those conversations talking about investments, where they feel like they're doing their spouse a favor by letting them not participate. Oh, she doesn't like this stuff. I take care of all this for her. Where a husband might feel like he's doing a good thing by not having her in our review meetings. But I feel very strongly that the opposite is actually what's happening. It may not be her favorite subject, but it's sort of like we're not doing any spouse a favor by not having them part of those meetings. Starting to learn, financial literacy. Maybe it's never been a thing for them, but you're not going to build it if you're not participating, and not being afraid to show up and ask what seem like stupid questions. There are no stupid questions. I don't know this stuff yet. And I've had a couple of meetings where invited the spouse to participate. Is there some noise happening on your side? I hear
yeah, there's some feedback. There's some feedback coming in. I'm trying to figure out where it's coming from.
That from Leo? Because it's not
Leo?
It sounds like someone.
Do you hear all the feedback, Leo? There's a lot of feedback coming in. I was trying to figure it out as well. I'm like,
or something.
Yeah, I'm like, where's this feedback coming from? Leo, are you there? Hey, Leo. I don't know if you realize, Leo.
I think maybe he turned on his microphone.
Yeah, because I was like, what on earth is going on? I wasn't sure if it was on your side or mine. Leo, are you there? Uh-oh. I don't think he realizes that he might not be on mute. Leo? Uh-oh. Leo, what's going on? Let me message.
Just talking about getting husband and wife to both participate.
Yes, that's exactly right.
Yeah.
So yes, so you were saying that she might think that, or maybe the advisor is making the assumption, or maybe even the husband may have made the assumption that, you know what, she's not that interested in the subject. Because I've had men say that to me, my wife's just not that interested in the subject. But I've also have had clients, some of them actually are portfolio managers, who say to me they're terrified of something happening to them and their wife doesn't know what's going on with their investments. So I've seen both extremes.
Mm-hmm. It's so important to try to engage both spouses in the conversation. And, I've even had it where a wife told me after a meeting, I did have a lot of questions, but I didn't want to take over my husband's agenda, because he loves these meetings. He wants these meetings. He wants to talk about the markets and all these things.
Right.
So what I did was had her come in for a separate meeting, just us, where I was like, where should we start? And she's like, can we just start at my statement and you can maybe tell me what I'm looking at? It was like right back to the drawing board. And she didn't feel good to, ruin her spouse's meeting by sort of asking, like, what am I looking at and what the heck is a dividend? So, that basic financial literacy is something that we should not assume everyone has. And if they don't have it, we shouldn't assume that it's in their best interest to not learn a little bit more, because that's how they're going to gain confidence.
That's right.
It's absolutely going to be good for them in the long run. And
I'm going to add one third assumption in that, Emily, which is we shouldn't also make them feel bad based on not knowing. Because I've seen that too, which kind of goes back to what you said initially, which was I didn't want to derail the conversation. Like they didn't have permission to say, I don't know, and I want to know.
Yeah.
So I would love, as we close off the podcast, some practical takeaways, maybe for women who are potentially new to investing, that you have, maybe for families and maybe for the advisor community. What are some takeaways who want to do that?
Very, very good point that I think we could maybe close off today. I hear that noise again.
Oh, Leo, we've got that feedback again. Okay. Could you just can you put your phone on mute just so we don't have the background noise? Okay, awesome.
Good.
So yeah, I'd love for you to close with those practical takeaways. I think new investors, female investors, even new investors who are men who I've met those men who are like, they're very in touch with their feminine side and they're like, you know what? I don't know. And I don't want to be in that, what contest that happens at cocktail parties. But I don't know where to start. So I just listen and I nod my head prettily, right? Smile prettily. Well, good for you.
Right. I mean, for women investing, I honestly think we already have a great psychology and mindset to be great investors. We have much more patience maybe than men. We don't, overtrade and suffer from this whole overconfidence aspect. We're in a really great position to be fantastic investors. All that might be missing is some education. And I think with education, it helps us tackle our fears, which in turn will help us be more confident. And we just need to seek some education, some great advice, work with people that you trust. Like we mentioned, get second opinions. It's not about becoming a financial expert, but if we can understand enough that we can get past some fears that are maybe keeping us from doing some of the things that we should, like we don't have any investments outside of our bank account, for example, and that's probably pretty these days maybe fairly uncommon, but like what is keeping us from investing in some stocks so that we can grow our retirement portfolio? Is it truly that we don't understand stocks? Well, then let's start there. See if you can get some education on it. Start small, whether it's do some reading online, find even like a financial blogger that you like or a financial podcast and start listening, and just start sort of picking away at the things that have you afraid. And I generally find that it's just that fear of things you don't understand. Totally. So if you can tackle that, I think that's the first step. My maybe closing thought for financial advisors is really just that, the onus is on us to give unbiased financial advice to the best of our abilities to all of our clients. Understanding investor psychology of our clients is part of the job. Understanding what's driving them. I don't always want to assume that, well, this investor is totally afraid of even investing in a bond, let alone a stock. But I know that they need some growth in their portfolio if they're going to retire when they want to. Then it's my job to do that education and explain that we need to find a balance that might have a little bit of risk, but it'll lead to the reward and the outcome that we're after. So important for us to educate as part of what we do with every client we work with.
And you are so essential. We definitely need to hear more of these kinds of conversations going on for clients, but also going on for advisors to think through, what biases that they have that might be impacting their clients' growth. And then my final question really is, if you have a daughter or son and you're raising children that you don't want to take on some of these confidence issues, what are some suggestions that you have there?
Yeah, I think the number one thing that we can do is just show our kids what working with money is like, and that it isn't something to be afraid of. I actually heard one of your other podcasts where you had a guest talking about just being open with kids, talking about money in all matters. I couldn't agree more with that. And I mean, I'm a little bit different because when I talk to my son and daughter about what I do, it's not coming from, a man doing these things. They're watching mommy doing these things,
which is awesome.
They might have a very different experience, but I do think that the younger you get them involved in thinking about it, will make it seem a lot less scary, and that financial literacy is going to, without question, build financial confidence.
Emily, you rock, and I'm sure your daughter seeing you do this, I think we as parents, children learn so much more seeing you do things than whatever we say. So yeah, thank you for being you. Thank you for being here. This was such an amazing conversation. And I just want to know how our listeners can get in touch with you, potentially find out more about your research if they want to know even more reasons why women are smarter when it comes to money and investing.
Oh, that's great. Well, reach out to me on LinkedIn. I think that's maybe the best way. Emily Burt. You could find me on LinkedIn. I'm at Cardinal Capital Management. I love talking about this topic with anyone that might want to hear more. And I'd be happy to even share some of the research that I found on these topics. There's some really great stuff out there. well, some of it maybe not so great results
Yeah,
that
exactly.
research is showing, but I can only hope that as years go on, some of these pieces of data improve.
And, you know what? It's on us, as you said, as advisors coming, like they're in the industry now and then are coming into the industry. It's on us to really change some of these outcomes.
Yeah, really.
And, you know, I just want you to know, confident hiring community, that we are going to be posting some of the research in the show notes. So look out for that. And for all of the women who are listening, who wondered where their lack of confidence might be coming from, unfortunately, the research shows that that Emily talked about, that invisible barriers to building your confidence really exist, and it can start early, and it can continue when financial systems that you rely on continue to leave you out of the financial conversation. So the good news is that even though women are less confident when it comes to investing, the research shows that women are smarter when they start to invest because they generate this better return that Emily's been talking about than their overconfident male counterparts. So think about that the next time you're at a dinner party and you hear some dude talk about his stock picks. Because, you know, really what matters when it comes to doing well in the markets is that long-term investment strategy over constantly trading in and out of the market. So if you need support getting started, it's important to work with someone you can feel comfortable asking some of the questions Emily talked about. Before investing, you need to understand how your portfolio is going to be invested, how it's going to be rebalanced, what type of fees you're going to pay. And if you'd like to have a conversation with someone from our team, feel free to reach out to us. That's it for today's episode of the Hiring Woman podcast. And if this episode expanded how you think about life and money, feel free to share it with someone who might need to hear this. And if you'd like to keep listening to more episodes of our podcast, you can find us on all of your favorite audio platforms, including Spotify, Deezer, Amazon Music, Player FM, and many more. Just search for the Hiring Women podcast and hit follow so you never miss a conversation. You're also welcome to follow us on LinkedIn, on our LinkedIn team page. LinkedIn, look under Team Jackie Porter. So that's it until next time. Keep building, keep earning, and keep living the life that you choose. Be in touch soon, hiring community. Thanks again, Emily.
Thank you, Jackie. It's been a pleasure.
Same